Now hey guys, now today we'll be looking at how to use the Ichimoku indicator. Okay, so go to trends, click on indicators, go to trends, and you will see the Ichimoku indicator. Now this is a very good indicator. I used to use this indicator when I was just starting out in Forex. It's a very good indicator to start trading Forex with. Now this is how you use this indicator. Whenever the red line crosses the blue line from below, that's a buy signal. Okay, that's a buy signal. And whenever the blue line is crossing the red line from below, just in this example, that's a sell signal. Okay, so this indicator gives both buy signals and sell signals. Also, another sell signal is whenever this green line here crosses the candles from above, that's a sell signal. Also, whenever this green line here crosses the candles from below, that's a buy signal. Okay, so you can use Ichimoku as a tool to give you buy and sell signals, or you can combine the Ichimoku with other indicators. For example, the stochastic. Here we have the stochastic indicator here, and you can also use the stochastic to give you buy and sell signals. For example, you can buy when the stochastic is oversold, that is when the stochastic is below 20, and you can sell when the stochastic is overbought. Okay, that's one strategy. However, you must be careful because sometimes the stochastic can be overbought and still rallies. Okay, so you have to be careful. You must combine these indicators together to get the best result. Also, you can combine these indicators with candlestick patterns, support and resistance levels, etc., trend lines. Okay, you can combine all the strategies together to give you the best result. Okay, so this is the Ichimoku indicator. Also, with the Ichimoku, we have what's called the cloud. This thing here is the cloud of the Ichimoku, and this just represents support and resistance levels. Whenever prices break above the cloud, that's a buy signal, and whenever prices break below the cloud, that's a sell signal. So the cloud also gives you buy and sell signal. The bigger the cloud, the stronger the trend. Okay, the bigger the cloud, the stronger the trend. So when you have a very big cloud, that's telling you the market is in a very strong trend. Now, whenever prices break through a very big cloud, just as in this example here, that usually means the market is going to really fall. It means the market may start a new trend. So whenever the cloud is big, it tells you that the trend is strong. And whenever prices breaks a big cloud, that usually means a new trend is going to start. Okay, so the Ichimoku is a very useful indicator. You can start trading Forex with this indicator. The only problem I have with the Ichimoku indicator is that it's very noisy. It clouds your chart. This big indicator with all these lines tend to cloud your chart. So what you can do is you can customize Ichimoku. You can go on properties. You can remove some of these lines if you choose, or you can just put the Ichimoku on some of your charts, because I don't really like the noise on my chart. I don't really like all these lines on my chart. So that's the main reason I no longer use Ichimoku. But starting out in Forex, you can really benefit from using the Ichimoku indicator. So you can combine the Ichimoku with the stochastic, which means whenever the stochastic is oversold and whenever we have the red line crossing the blue line, that's a buy signal, and the stochastic oversold is also a buy signal. Whenever you have those two things combining, that's a good time to place a buy order. Okay, so that's how you can use the Ichimoku to help you with trading Forex. Now in this lecture, we'll be discussing the momentum indicator. Now this is another very good indicator that you can use as a beginner trading Forex. This is also an indicator that I use when I'm trading Forex. So this is a very good indicator to use. So how do you use the momentum indicator? You use the momentum indicator to trade market divergence. Okay? And I'm just going to explain what do I mean by divergence. Divergence is when the market is making a higher high while the indicator is making a lower high. The market is making a higher high and the indicator is making a lower high. That's what you call a divergence. And in this case, that's a sell signal. And if you had sold the market here, then you would have made maybe 200 pips. And I'm just going to show you some more examples of divergence. So here we have another very good example of divergence. Here we see the market's making lower lows while the momentum indicator is making higher lows. Okay, so this is a lovely example. Nice divergence. And you can see, as a result, market rallied. So this is a lovely example of how to use the momentum indicator. Here are some other lovely examples of trades you could have taken using the momentum indicator. So here the market is making lower lows, and on the momentum indicator we are making higher lows. Divergence by the market anywhere in this region, and that's 100 pips, 130 pips up. Here the market makes again divergence. Sell the market anywhere in this region, because here, let me draw the line. Here the market is making higher highs while the momentum indicator is making lower highs. Okay, lower highs, market is making higher highs, momentum indicator is making lower highs. That's a divergence. And you can see the result is the market falling over 300 pips. Now this was a fundamental announcement, but nonetheless you could have entered this trade based on the momentum indicator. So remember, you can combine these indicators together, the momentum indicator and some of the other indicators, plus your knowledge of the candlestick patterns, trend lines, support and resistance, into one strategy to get the best results. Okay, so the momentum indicator is a very good indicator to use when you're trading Forex. Here we can see the market is making higher highs. See, higher highs, and the momentum indicator is making lower highs. And as a result, we see the market fell. So the momentum indicator is a very good indicator that you can use as a beginner trading Forex. Now we'll be looking at the ADX indicator. Now this is a very good indicator. This is another very good indicator that you can use as a beginner trading Forex. We're going to use the ADX indicator. So it's the average directional movement indicator. You can find it in trends. Go to trends and you can find the average directional movement indicator. This is a very good indicator to use because it gives you buy and sell signals, and it also tells you whether the market is consolidating or trending. Now if the market is consolidating, this line here, which is the ADX line, will be entangled with the other lines, just like this here. When the market is trending, the ADX line, this line here, will be above all the other lines. Okay, so that's how the ADX can be used to tell you whether the market is trending or consolidating. Now, how to use the ADX for buy and sell signals. Now, this is how you use the ADX. Whenever the red ADX line, this is the minus line, crosses the plus line, which this black line here is the plus line. Whenever the minus line, the red line, crosses the plus line, whenever the red line goes above the black line in this example, once it exceeds the black line, okay, just wait until the red line exceeds the black line. As long as it goes a little distance above the black line, that's a sell signal. Okay, and the same thing goes for when the black line crosses the red line. Both lines have to exceed each other before the signal is confirmed. Okay, so let's look at how you can trade using the ADX. You could sell the market once the lines exceed each other. So you could sell the market here at this particular point here. you could have sold the market. That would be right around here. If you had sold the market there, you would have made, let's see, you would have made 140 pips using the ADX indicator. Okay, and remember, you can combine these indicators with stuff like trend lines and candlestick patterns and other indicators to form a nice forex trading strategy. Okay, now let's look at another trade with the ADX indicator. Remember, when the lines exceed each other, that's when the trade is confirmed. For example, look at this one. The lines exceed each other right around this level. This is when both lines exceed each other. And this is a sell signal because the red line is above the black line. Okay, the minus line is above the plus line. That's a sell signal. So this is a sell signal. And you could have sold the market here over 150 pips profit. So the ADX is a very good indicator. Now here's an example where the black line crosses the red line. Let's look at that. So you would have waited until the black line exceeded the red line, which is right around here. This is when you would buy the market using the ADX. So you would have entered right around this level, profit over 140 pips profit. So the ADX indicator is a very good indicator that you can use as a beginner trading Forex, okay? And you can go back and backtest using the ADX indicator. Remember, once the black line exceeds the red line, that's when the trade is confirmed. So you would not have entered here, you would have entered right around this level. This is when the black line exceeded the red line. And if you had entered here, let's see. If you had entered there, that means you would have entered the market right around this level. And that's 160 pips. Okay, so the ADX is a very good indicator. And remember, you can combine the ADX with other indicators such as the stochastic, the moving average, the Ichimoku. And you can combine everything along with your knowledge of candlestick patterns, support and resistance, and make one big trading strategy. Okay, so yeah, and I can show you tons of examples of trades that you could have taken using the ADX indicator. Remember, whenever the ADX line is entangled with the other line, that's when the market is consolidating, meaning that's when the market is going sideways. Whenever the blue line, the ADX line, is above all the other lines, that's when the market is strong. That's when the market is trending. Here's another trade that you could have taken using the ADX indicator. Remember, you wait until the lines exceed each other. That's when you would sell. So you would sell the market here when the red line, the minus line, exceeds the black line. Okay, so that's when you would sell. And let's see how much profits you could have made if you had entered the market there. Could have made over 100 pips profit. Now, nothing is 100%, so there might be times when you enter too early using the ADX, which might result in a loss, and that's because nothing is 100%. So here's an example of that. Here we have the black line crossing the red line, okay? And you might have entered right around this level here. And if you had entered here, the market would have gone against you 50 pips. The market would have fell 50 pips before actually rising 100 pips in your direction. Okay, so you might have entered too early, and as a result, you might be stopped out on this trade. If your stop loss order wasn't below the lows, you might have gotten stopped out on this trade because you entered too early. Okay, so nothing is 100%, which is why it's good to combine these indicators with other indicators and with other strategies such as trend lines, candlestick patterns, support and resistance, etc., and form one big plan, one big strategy of trading the market. However, if your stop loss order was below the market, you would have made 140 pips off this trade because the market eventually rallied. Now, one of the reasons why this is a good example is because remember, whenever the ADX line is entangled with all the other lines, that's when the market is consolidating. Okay, and in this example, you can see that the ADX line is entangled with all the other lines. So this is not really the best ADX signal. Okay, so that's how you can trade Forex using the ADX indicator.